Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Garrett Cook. And we have Blake Morrow on the line. He's Chief Currency Strategist at Wizetrade. Blake, how you doing on this Thursday morning?
I'm doing great. We are 1 day closer to Easter weekend, so I'm doing great. How about yourself?
We're doing good.
All right, so Blake,
go ahead.
Well, I wanted to ask you this morning. We got the currencies moving. We have all the FX news coming out. But before we get into individual FX, could I just get some comments about what you see happening in the oil markets and potential spillover that could come into whatever your main currency pair is going to be? So we'll use that as kind of a headway to get into specific pairs. So what do you think about oil and what's this going to mean?
Yeah, no, thanks, Garrett. I appreciate the appreciate that. I appreciate the question. Looking at oil, one of the things that I was actually looking at this morning, the Wall Street Journal had a great blog on expectations from banks on where they see crude oil going in the near term. Every one of the banks that I saw, maybe there's I think Bank of America, maybe Bank of America Merrill Lynch might have been the only ones that saw flat prices over the course of the next few months. Every other bank has forecasts that go straight up, basically from here. The thing that I look at in the markets is a lot of price action. And I follow the Canadian really closely because of what's happening in crude oil. And same with the Norwegian krona because of the pretty big oil producing and exporting countries. However, what I've noticed is that that the price action in crude, one would think with all the turmoil in the Middle East that's happening right now, especially with what's happening in Yemen, with all the, maybe some of the buildup, that we would see a little bit more bullish movement in crude, and we're not. And that has to worry. I know people like myself, I don't necessarily trade crude, but if I'm watching crude and I'm watching it not go higher based on some of the geopolitical events that are happening right now, if something doesn't go up, usually the only other direction it's going to go is down, or perhaps sideways. But the propensity would be that all the people that came in buying crude, they're not getting a bang for their buck. They might have to turn around and sell it. So I would venture to guess that we're probably going to be testing the lower end of those ranges as some of the risks dissipate in the market. And if that's the case, that could weigh on the Canadian currency and also the Norwegian krona, which means that I'd probably play those to the short side against the dollar or some other cross rate.
So do you think that this is based on the behavior of the pairs that you're trading or you're watching? Does the crude action, does this impact have a direct link to the FX, or do you think that these are other people? Is there a behavior coming in where there's companies that are trying to hedge now within the pairs? I'm trying to get an idea for, like, when prices move or you watch a certain stock, you watch a certain currency pair, there's a behavior that you tend to notice. And I'm wondering if, because of the dramatic move that we've had, coupled with all this uncertainty with rate hikes, if there's been a change in the behavior that's the way about, or change in the behavior about how these FX pairs are trading now. Is there more, like, headline risk do you have? I mean, I know FX you can't get an intrinsic, but where's the risk in these moves now with FX? If we're saying that a bunch of the banks are going to be flat on oil, if we have a whole bunch of the sediment impact coming from Yemen that's going to be impacting oil, what does this mean in the FX markets? Is there a whole lot of other companies that are coming in to hedge themselves? What are you seeing going on here behavior-wise?
I would assume so, but what we're seeing is really a direct correlation between the Canadian currency is probably the most prominent in the FX market. So as crude oil rises, the Canadian currency tends to strengthen, which puts the U.S. dollar Canadian probably lower towards the lower end of it's got about a 400 or 500 pip trading band between 125 or 124 and 128 or so, give or take. And so as crude has been moving higher, it pushes the dollar Canadian towards the lower end of its trading band, and vice versa. As far as hedging goes, I think the fact that you didn't have any speculators really playing crude oil to the short side as crude was dropping. It's and everybody and all the bank analysts expect crude to actually bottom here and continue higher. I still believe that because of positioning, there's still a risk to downside in crude oil from here, from current levels. And if that's the case, I would assume that there's going to be some hedging by selling Canadian like selling the Canadian dollar. It would now be one of the reasons why the dollar Canadian has been at such lofty levels, yet there's been very little pullback. There's been very little correction in that currency pair from running from below parity to $1.26 where we're at right now. I mean, that's a huge move without seeing much correction in the FX market.
So I'm taking a look at the Canadian futures here, and for the people that are listening at home, if you want to trade an ETF on this, we're looking at Foxtrot X-Ray Charlie, that's FXC, to trade the Canadian dollar in the ETF markets. I see a bottom here coming in, from some heavy selling over the past year, and then it looks like February seemed to kind of be the start of this sideways trend. There was kind of a little pennant that ran up until March, and it kind of looks like we're stair-stepping down here. So do you think that the Canadian dollar is going to continue to collapse? I mean, is this move this morning, is this something that is allowing you to reposition to go short, or how are you viewing this move this morning in light of the breakdown and also this kind of flat area we've had in the past month and a half?
Those are great questions, Gary. And by the way, I actually picked up some Canadian currency on the short side yesterday. I'm pretty much flat in the position right now. There's been a lot of volatility this morning, and I've had plenty of opportunity to take profits, but I'm just sitting in it. But, if you're looking at home at the chart, the FXC, we are basing at low levels. And, as a trader, and over the last, 20 years that I've been trading, and I'm sure you and many listeners know this, price action is so important in the markets. And when you fall at such a rapid rate like we did in the Canadian currency, yet you fail to bounce, that means that the buyers are not really coming in at current levels. They're coming in to a point to where they're stabilizing price, but you're not seeing the value proposition there that's actually creating a V-shaped recovery, which tends to happen after big falls or big rallies too. You get the capitulation on either side of the market, doesn't really matter. But in this case, we have a very strong down move. You're finding buyers down here, but not enough to really create an impetus to buy at these current levels. So that suggests to me that we probably have one more thrust lower in the Canadian currency. And if you take the Canadian economy that's so heavily dependent on crude oil, and it has such a frothy real estate market over the last few years that, possibly could impact their economy, I think the Canadian currency is set to move lower. And I know that's probably contrarian to a lot of people's thinking right now, but I would have a very hard time playing the Canadian currency to the long side.
And it just looks like that based on the chart. So we've got some oil problems. We've got problems coming out of Canada. If I could just switch gears now and take a look over at the UK. For those of you, I'm going to ask you about the British Pound USD pair. And for you guys at home that are looking at the ETFs, we're looking at Foxtrot Echo Bravo. That's FXB to trade the British Pound Sterling pair. So we had the weak construction PMI that came out. What is this impact going to be on the currency pair now? I mean, I'm seeing volatile trading now, but it's been hanging down, and it looks like seasonally, in the summertime, it tends to be flat until the second half of the year, which it looks like we're going to end up having some troubles. What do you think?
Well, right now, and the pound, I've been really avoiding playing it to the long side over the last couple of months. Well, first of all, it's dropped really, really aggressively, even after the independence vote, earlier this year, but at the end of last year. But now what we're seeing is the election come up here in the next couple of months, and so the last 2 months I've been avoiding playing the pound to the long side. I think a lot of heavy selling has met the market over the last couple of months because of that. It's been as a result. Now I'm not too sure if I'm too keen on playing the cable to the long side because the election is going to bring in some uncertainty, especially as we start getting into polling and the different parties and how far polling that's going to affect the cable to a great extent. But I don't know if I really am too comfortable playing the pound more on the Bank of England's lack of interest in raising rates at current levels. Where you take the Federal Reserve that looks to be more inclined to raise rates this year at some point. The Bank of England, there's still a lot of uncertainty there. So as long as there's still uncertainty and we don't know if we're going to get a lift-off from the Bank of England, I still have a very difficult time playing the cable to the long side, especially against the U.S. dollar.
Yeah, I haven't taken a look at the housing situation over there. I remember everybody was talking about housing prices being pretty hot. Maybe it was about a quarter or so ago, and that talk seemed to kind of die off as we got ready for the U.S. rate hike here. So with these worries then that you have, I mean, were you going to finish your thought there before I went on? I heard you.
Oh no, I was just agreeing with you.
So with this worry, then I mean, we don't know what's going to happen in oil prices. We don't know what the Canadian government's going to do. We don't know what the UK government's going to do, and we're kind of speculating on what the Fed is going to do. So usually in situations like this, from my experience, a lot of people like to run into Swiss francs. They like to kind of get some protection from the Swissies. There's an appeal there. So I'm taking a look at the FXF ETF here. That's Foxtrot Echo, Foxtrot X-ray, Foxtrot. And just taking a look even at the Swiss franc futures, do you have any view here about the security plays? Is there any popularity going on with this currency pair?
That's a unique question. It's a great question. Normally, in a situation of uncertainty, you're right. People tend to flock back to the Swiss franc. The Swiss National Bank has really put a monkey wrench into that plan for most institutions and most traders. They don't want to hold long-term positions short the franc, because the Swiss National Bank right now holds a negative rate of 0.75%. So it's a very expensive proposition to hold hold long Swiss francs in any portfolio for any extended period of time. I think over time the Swiss franc is going to weaken, but you're right, especially with the situation in Greece. We're coming into next week where we're not too sure if the Greek government's going to be able to make payments on pensions. It's still Grexit maybe only 10 or 15% possibility is still a possibility. So that's keeping the Swiss franc relatively well bid right now. But like I said, it makes it very expensive. The Swiss National Bank has made it very expensive for traders to hold long Swiss francs in their accounts because of the negative interest rates. And, a lot of people speculate the Swiss National Bank may even lower the rates even further. Some speculate as much as 1.5% that you'd be paying annually to hold Swiss francs long. So, when you're in a world that's starving for yield as it is, and then you have to throw on a negative yield on top of that, it just makes it a very unpopular trade at the moment. So I think they're doing a good job as best as they could to get people to steer away from the safety of the Swiss. So any buying that you see, I think, is more near term than anything. And as these risks dissipate, then you're probably going to see some continued selling in Swiss francs.
All right, so I have one final question for you, if you would please, Mr. Pipsar. I'm taking a look at the Euro CHF pair, and in the beginning of March, it looked like there was some strength coming back into the pair after the Swiss central bank decided to cut the 120 base level. It looked like the pair was starting to rebound on its own without any action, as if it was coming back to that level. I know there was a lot of pressure pushing down on the currency pair ahead of that base pull, but now we've kind of been sloping away. Do you think that pair is going to continue to collapse? Do you have any levels you're looking at here? I don't know what to think of this. I was expecting it to continue to rise, and that's not the case.
Yeah, and I think, again, just going back to the previous conversation about the Swiss, I think a lot of it really has to do with the uncertainty that's surrounding the euro at the moment. Mm-hmm. You've got the ECB, which looks hell-bent on expanding its balance sheet no matter what. You've got Greece that could be exiting the eurozone. That is attracting, sellers into the Swiss franc, sellers into the euro Swiss, which means people are buying Swiss as a result. And yeah, we were getting that natural lift, which I personally played the euro Swiss and the dollar Swiss long after the Swiss National Bank debacle, if you will, because we were getting exactly what the Swiss National Bank wanted. They dropped the floor. They shook out a lot of obviously it was a huge event, unprecedented event, shook out a lot of institutions, a lot of banks, a lot of traders, and so they were getting that natural lift with that negative interest rate. I would think at some point the euro Swiss or the dollar Swiss will be a nice currency pair to buy on a dip, but we have to get through a lot of these issues that is surrounding Europe at the moment.
It's interesting the way that Swiss franc exploded on that day. I'm looking at a longer-term chart here, and then just came back to that level just above it. It's finding some support here. So it's interesting that, all the news in that one day, and it comes back to that level. Before we let you go, Blake, a couple questions for you here. A lot of talk about interest rates and going up and, staying where they're at. Is the Fed going to raise rates this year? What's your outlook?
it's such a it's obviously the $1 million question right now, and I think that the Fed has put themselves in a box, and their biggest tool in the toolbox is their credibility. They have the ability to talk, and the market react. And even former Fed Chairman Bernanke says in his new blog, it's just their most powerful tool. Everybody knows it. So what they have to do is they have to protect that tool. That means if they have been walking the market down the road that the Fed is going to raise rates, they will have to raise rates. Now the question is how far, how fast, and will they be able to continue? My opinion has been over the last couple of years that the Fed is going to fall in the same trap that the European Central Bank did a few years ago. We're going to raise rates because we're expected to. The Fed's going to do it. May only be 0.1%, it may be a quarter basis point, who knows. But when they do it, the economy and the capital markets, the financial markets, may not take too kindly to it, and they may have to back off again. And I think we're going to be near ZIRP, whether it's zero interest rate policy or just above it. I think we're going to be at very low rates for a long period of time. We're going to have a series of fits and starts, meaning that the Fed will raise rates, they'll lower them. They'll raise them again to respond, because they have to lift off if they can, and as a response to maybe some deflationary pressures or maybe some recessionary pressures, they're going to have to lower them again. I think we're going to be doing that for years to come. And so in my opinion, they will be raising rates at some point. How the market takes to it, I think it probably won't be too kindly. And that's just been my long-standing opinion about rates.
Okay, just want to get your final thoughts on FXCM. I know you've been following them. You're kind of sympathetic to their cause. It looks like they're paying some money back to Lacadia. Now they're $54 million. What do you think? You think this stock can stage a recovery?
I think even though they're a competitor of our parent company, I believe that the FX market is a great, viable business to be in. I think FXCM runs a real tight ship. They just got, unfortunately, the risk got ahead of them a little bit, and obviously their stock has taken a toll. I think if they can continue to pay down the loan, because it's got, probably some pretty crazy, interest on that loan. If they can pay that down, I'm not following it as closely as that was, a few months ago. I think the stock can eventually stage a recovery because the FX market is always going to be attractive for traders. And like I said, they're the biggest name in the business right now here in the U.S. And I think they'll continue to hold that title.
Okay, we've been on the line with Blake Morrow. He is the CEO of Chief Currency Strategist at Wizetrade. Blake, thanks for joining us. We hope to talk to you again soon.
Thanks, Joel. Thanks, Garrett. Appreciate it, gentlemen.